Hey, what's going on, guys? Hey, quickly wanted to go over my high dividend portfolio. Kind of give you what I'm doing. Um, this is Seeking Alpha. I kind of started using this. It's really cool. Pretty much does almost everything I needed to do. Obviously, it doesn't rate your dividend safety score like that one site I was using, but other than that, it gives me dividend EX dates, dividend pay dates, everything. And I have most of my portfolio on here. I added some on my retirement account. I still have about $65,000 in rollover retirement. That's probably going to hit my T. Rowe Price account, and I will add it to this once it hits that. I took about, I don't know, 60% of my retirement account, and I put it into dividend stocks. I was in index funds and growth index funds and small cap and everything. So I still left about 105,000 over there in my index funds in my T. Rowe Price account, and I moved the rest of it over to my brokerage account. And I'll kind of go through that real fast here. This is kind of my account value minus the rollover, which get it closer to 600. And then I do have a property note. I sold a piece of land a couple years ago that I have about $40,000 in a note on, and then obviously I own two pieces of real estate. Well, me and the bank, but the good news is I own more of it than the bank does right now, and so that's a good thing. But so I would say it's about double my net worth, probably. I mean, real estate you really don't know until you sell it, but roughly about double what this is showing. So about 1.2. I would say with the real estate, and I plan on actually trying to selling a piece of my real estate that I live in and move into my other rental, so I can avoid those capital gains and sell the property I'm in. So that's what I'm probably looking to do here in the next year. But real quick here, let's go over this. Some of these I'm going to roll out of eventually here. When the time is available to do so. Basically, the gains are so high on them that I'm trying to avoid those capital gains. Like AIG, I think I bought it in the 30 range, something like that. Okay, real quick here, though. I just have one position of AGNC. I'm going to roll out of that. I think I'd rather be in Aries. Aries has a great dividend history. If you ever get a chance, go look at their dividend history. It's pretty good. I mean, for a high dividend stock like that pays, up to around 9%. And agency is my only mortgage REIT, and probably going to roll out of that. I haven't been in it very long. I just have one position here, but I'm probably going to roll out of that and probably put it into Aries or something similar to Aries. AIG, which is an insurance company, obviously, I just have one position of. I bought last summer, and I think I have a call on that. Pushed pretty far out because it ran up so far, and I kept rolling it out and leaped it out farther and farther. I probably will leap it again when the time comes when it's available to leap out farther. But right now I just have one position of that, and then eventually I think I'm going to roll out of that and put it into a higher dividend stock than AIG pays. But for now, I try to avoid those capital gains. Got to hold that a year. AM is a sorry. It's an oil stock. It's actually an MLP, Master Limited Partner, I believe, as most of those pipeline stocks are. I just own two positions of that. It pays a really good dividend. I think I bought it around $8 about a few months ago, and now it's hovering around the $10 mark. It's gotten a little higher than that, but right now it's around the $10 mark. It pays a really good dividend, and I just have two positions of it. Aries, this is one of the ones in my retirement account I bought five positions of. It pays about 8.5% to 9% dividend. Let's see. I just purchased this in my retirement account. And I looked at the dividend history. It's very good. They didn't cut their dividend during the last downturn, and their dividends kind of dropped. I mean, kind of gone up over time, but it's mostly stayed about the same. And so over the last 8 to 10 years. So I was pretty confident with that. I own five position of Aries. I might add more, but right now I think I'm pretty happy with that. BGS Foods, I own three positions of, and and they pays about a 6% dividend, maybe a little less. You know, it's kind of jumping around all over the place. I don't know if BGS Foods is a long-term holding for me. Right now I'm quite a bit up on it, so I'm going to definitely hold it until at least we get to a year's worth of capital gains, so I can avoid those short-term capital gains. BP, I got it pretty low. I got it in the low 20s, and I own 5 positions of it. It pays around a little under 5% dividend. It's definitely not the best oil dividend stock, but I just felt like it was gonna go up, and then BP was down around 20, and everything else has already climbed, and so BP was kind of the last oil stock that hasn't jumped, and so I bought 5 positions of it, and I don't know if it's a long-term holding for me, but I imagine BP is going to get close to the $30 mark here within the next year, is what I'm kind of thinking, and probably eventually I'll probably roll it over into another oil stock. You know, I really wish I would have held on to my Exxon. Obviously, it's pretty much doubled in the last 6 months, but you know, I don't always win them all, and so I didn't definitely win that one. BTI, British American Tobacco, I have 5 positions, pays about a 7% dividend. I do sell covered calls on that as well at times. Let's see here. Conagra Brands is another food prepackaged good food company, and I own 2 positions of that and do sell covered calls. Cisco, I own 2 positions of Cisco, and it's a obviously everybody knows what Cisco Systems is. It's communication companies, high-tech communications companies for servers, computers, etc. like that. I have 2 positions of that, and that's climbed quite a bit since I bought it as well. And I do have leap to covered calls on that as well, because they have climbed so much. And so some covered calls when the market was down, obviously kind of rebound. It's not the smartest thing in the world to do. I mean, I learned that I would have been better off just letting the stocks be patient, let the stocks recover. But you know, you never know if that's exactly going to happen. But looking at back hindsight 2020, you know, when a stock drops like that, you know, and there's no reason for really sell a covered call, and just I thought I could manage it, and I've gotten better at managing them. But man, it's something you got to really work at. And so it's basically an active management on those covered calls, and I had to leap a bunch of them way out just to keep the stocks. And you got to really worry about ex-dividend dates, because that's when your stocks will get called by your options will get called, and then you will lose your stock, and you don't want that to happen. So especially when you're down on it and you could roll it out. So I roll them out as far as I can, and hopefully I'll get a chance to roll them out again, especially get around that ex-dividend date. Is like I said, that's when you got to worry about it. So Devo is it's an amplified, one of those high dividend ETFs that basically sell a little bit of covered calls, collect dividends, etc., etc. I have 3 positions of that in my retirement account, and so it does have growth. So I'm really in my retirement account. I'm really trying to get some growth. I know Aries does not really grow that much, but it does pay a very high dividend, and my growth will come from the dividends and reinvest those. Devo's kind of a growth / dividend stock, and so I have 3 positions of that. Dow Chemical, I've had this one for a while, not quite a year. I have a leap on it again as well as on my call. I just have 1 position, and it pays a decent dividend. I want to say about 3.5. Enterprise Products, I got back into this. My option was called around 21 or 22, somewhere in that range, and called it early, and it was my fault. I didn't manage my option very well. EX dividend date came around. This thing pays a very high dividend, you know, 8%, something like that, and so somebody grabbed my EPD. But I bought back into my retirement account. I probably will eventually sell covered calls on it, but right now my retirement account is not set up for covered calls, and I'm working on that. Just got to do some paperwork, etc. And I'm not sure how much of it I want to sell covered calls on it, and all of it. Some of it I can't. Like those ETFs don't have covered calls, or there's just not enough movement on those to sell covered calls. But EPD, you can sell covered calls on, and so probably will. eventually do so. ET, I still have 1,000 shares. I've had these for over a year, I believe. ET's really ran up in the last, I want to say the last, this is basically, it's trying to show you my cost basis, but that's not the value of the stocks, so kind of give you an idea. But ET's ran up crazily in the last few months, up to, I think it's just over $11 right now. Let me see if I can find it. Yeah, see, there's the total here value is $11,000, so it's just over 11. EVRI, this is a gaming stock. I bought it around $5 a position, $5 a share, and I bought 3 positions. It's ran up to, I want to say it's around 23. They're showing me my cost. That's actually not even my cost. That's just when I entered my stocks, and that's what the cost was on Seeking Alpha at the time. Cost basis on that, it's just around $5 per position. I'll show you again in my Robinhood account, but it's around 23. My leap is lower than that, so I'm going to have to try to leap it again, hopefully in the next month or so, or another 6 months to get it close up to what the value is. Try to keep those gains. The good news about EVRI is not a dividend stock, so you don't have to worry about ex-dividend date, but you never know when somebody's going to call your option, so I'm try to roll that out and try to push it farther and collect those gains. But FHN, I just have 1 position of that, and that is just a First Horizon bank, and so it's just a dividend stock, and I've got that around quite a bit lower than what it is currently. Right there, it's at 17.18 a share because I have 100 shares, and so GSK, GlaxoSmithKline, very good dividend stock for a pharmaceutical company. I have 4 positions. I've owned it for about 3 or 4 months, maybe a little bit more, and pays very good dividends, and you can sell covered calls on it as well. HBAN, another Huntington Bank, 1 position. Let's see here. It pays a good dividend. I want to say about 4%, and it's ran up quite a bit since I bought it as well. I want to say I bought it around 10, maybe a little lower. HIG, Hartford Insurance. This is probably one I'm going to roll out of into a better dividend stock. It's worth around $62.15 right now. There's some type of acquisition going on with Hartford. I've rolled out to where it's supposed to be sold at eventually. It may not go through. I'm not really following it that closely at the time. I just have 1 position of HIG, and I'm way up on it, obviously. I think my cost is in the 30s. HPE, I just have 1 position. It's a dividend stock. I want to say HPE pays around 4.5, and then HPQ pays around 3.5, and I have 1 position of that, and I believe I have calls sold on both those. Intel, I just have 1 position. I wish I would have bought more when it was down there in the high 30s, but I didn't. It went up too fast before I can gather enough money to put in there. Right now it's with 55.87. It pays a decent dividend. It's a good cover call stock. Obviously, I sell cover calls on International Paper. IP I have 1 position on. It's worth 61.04 as we speak. I think I got it around the 40s, and it just ran up. It just ran up so fast, and I had a call on it, obviously, so I've been managing that call. I have it pushed out as far as I possibly can. Hopefully, at the end of this month, they'll allow me to leap it out another 6 months because we're getting to the end of a quarter. And so hopefully that's the case. JEPI, I'm looking to purchase. I did not purchase. Obviously, JEPI is one of those ETFI dividend stocks in my retirement account, but that's something I'm going to add to in my rollover. KeyBank, I still have 4 positions of. I want to say I got Key around really close to around $10 or $12 a share, somewhere in between there. Just guess on top of my head. I need to update my cost basis on this, but I'll do that here in the future. KMI, Kinder Morgan, I still have 5 position, very good dividend stock, about 6%. I think my cost basis is around 13, something like that, and you can sell cover calls on that. I currently don't have any. Coca-Cola, I have 2 positions. It's worth roughly around 50. It's worth more than that. It's worth around 54, low 54s. somewhere in that. I do have a covered call on that on 57, expiring next week. Lumen Technologies. Yeah, that's when I laugh. Obviously, a high-paying dividend stock. Anybody that knows dividends, I got it at around 12. I have sold covered calls on it. I've owned Lumen is obviously a renamed version of what were they called? I'm trying to remember. Let me think for a minute. I'll go back to it, but it's a renamed version of just recently renamed CenturyLink. And I've been burned on CenturyLink in the past, and so, you know, back when it was in 1920, cut their dividend, etc., etc., etc. I just have one position of it. It does pay about 8.5% dividend. I do sell covered calls on it. I'm not sure I'm not sure Lumen is a long-term dividend stock for me. But right now, I just have one position, and I'm going to probably eventually roll out of that to something I feel a little more comfortable with. On Main Street, I got this one a really good price back when that dip, and I got it around 24. It pays $20.50 a month for my one position. I wish I would have bought more, obviously. This is a long-term hold for me, and if it dips again in the future, it gets below 30, I definitely would be buying more. And I do sell covered calls on that as well. Manual Life is an insurance company. I have one position. I do sell covered calls on it, and it pays about a 4.5% dividend. Ulterior Group, I have 3 positions on that. I do have a covered call on that as well. It ran up to about 50, and then it dropped back down. I was really surprised it ran up so fast. It really ran up in I want to say March, April. I do sell covered calls on that, and obviously it pays about a 7% dividend. I'm not sure what my future is with Ulterior Group as far as adding more. I'm definitely going to keep the SIN stocks I own. I own about 700 shares between Ulterior Group and BTI, British Tobacco. Obviously, the dividends are really good, 7%. You sell options on them. Maybe as my net worth gets bigger, I might add more. But right now, I think I'm good on my tobacco stocks. Medical Properties is a REIT. It pays about a 5.5% dividend, maybe a little bit more, or maybe a little bit less. And I own 6 positions of it. And you can sell covered calls on that. Navient is a bank stock, kind of like similar type of in the banking industry or the loan industry. I have one position. When I bought it, the dividend was really high because the stock was low. I'm not sure if it's a long-term hold for me, but obviously I'm going to hold it out for at least my 1 year to avoid my short-term capital gains taxes. NUSI, this is another of those ETFs with a high dividend covered call / growth, and I have 4 positions of it in my retirement account. It pays about an 8% dividend. And I'm probably looking to maybe purchase more NUSI in the future. This is the first one of my T. Rowe Price mutual funds and OTCFX. In the future, I'll go over those, but so we'd have to click on that and they'd all open up and it'd take more time, etc. But just kind of show you what I own. Oh, that's small cap. I can tell by the value. It's a small cap. I got mostly out of my small cap and my mutual funds just because it's ran up the most and it's the most volatile. That's why. Plains All American, another midstream stock. I own 6 positions of it. I don't have a call on it currently. Pays a really good dividend, about 8%. And I have it on both my my brokerage accounts. PBA, I just have one position of PBA. I wish I would have bought more. It was in the 20 range, but I didn't. It was just kind of spread out to other stuff. It's up to $33 a share. But it pays about a 4.5 or 5% dividend, I want to say, just off the top of my head. Pfizer, I have 2 positions. I used to have 4. I had my covered call at EX date, not managing it well, and I lost 2 positions at EX date. And I rolled those over to GSK when I lost them, GlaxoSmithKline. They are pharmaceutical account or stocks I own. So I have currently have 2 positions of Pfizer. It drops back down into the mid 35, 36. I'll probably look to buy more. Another T. Rowe Price mutual fund. It's just a trying to remember which one this is, if I could tell. Nah, I can't tell by looking at it without clicking on it. But I've owned these for years as far as the T. Rowe Price mutual funds. And they're just index funds, low fees index funds. PPL obviously is a power company on 2 positions. It pays about a 5.5% dividend, and you cancel covered calls on that. And then these are obviously all more of my T. Rowe Price mutual funds. See the values here on the far right. There used to be a lot more until recently when I rolled those over to my brokerage account in my retirement account. QILD, I own just 1 position in my brokerage account and 1 in my retirement account. The reason it dropped, I believe today was the EX dividend date. Everything else was up to date. I'm 2 position. Obviously, QILD pays about 11% dividend. I'm not sure I want to invest a lot of money in QILD. QILD over time seems to go down. It doesn't really hold its value, and I'm just not big on investing in ETFs that are eventually going to go down. I've had enough of those in my time investing in dividend stocks. I do not like reverse splits. And so I will probably keep some QILD and see how it does here. You know, and it's in my retirement account, so I don't have to worry about long-term capital gains and all that kind of stuff. And so regional finance, another mid-sized bank stock, a regional bank stock. Just have 1 position of it, and it's way up on my 1 position. I wish I would have bought more, obviously. I'll say it pays about a 3.5% dividend. And then RPMGX is another of my T. Rowe Price ETF, or not ETF, index funds. SCHD, this is a very popular growth dividend ETF. And I have 3 positions of it. You cancel covered calls line, which I am looking to do in the future. And I'm definitely going to probably gather more SCHD. The dividend is just under 3%, but the growth is, that's what we want, right? We want a dividend and we want growth. And so the growth is good. It's not necessarily, I would say it's right along with the S&P 500, somewhere in that range. And so, let's see, AT&T. I actually bought more AT&T when they talked about the dividend decrease and the stock split. This is what I think is going to happen to AT&T by holding other stocks that have spun off like this. This is the reason I bought more. First, I think what's going to happen is once it gets closer to that, the stock split where they spin off the other company, I think what's going to happen is AT&T is going to go up in price. I think it's going to be in the 30s, in the low 30s. And then I think what's going to happen is it's going to spin off about a third. Maybe I'm just kind of estimating what I kind of gut feeling without looking too hard at the numbers. And I just kind of watched a few other YouTube videos. So that price is going to be around, AT&T will drop in probably the low 20s. And at that point, I think just like the other stocks I've had that I spun off, they backfilled really quickly. So meaning that the AT&T part of the stock went up in value very quickly, like back up to the mid-20s, is what I'm thinking. As well, it's going to spin off a Discovery AT&T new stock that I am probably going to eventually sell because it's probably not going to be a dividend stock. And I will probably repurchase other dividend stocks with that and just keep my 8 positions of AT&T. I believe it's going to be, if I had to guess, when it's all said and done, a few months afterwards, probably in the mid-20s. And so, and in the long run, I'm going to profit from that, even though AT&T will be paying a lower dividend. But with a lower price, it will probably keep that dividend a little higher. So if it's around 20, that dividend will be closer in the 5s and the 6s. So is what I'm thinking. But I could be wrong. That's just the way I look at it. I haven't spent a ton of time studying it. I have watched a few YouTube videos on it, and mostly when companies spin off stock, it's a good thing, and usually I've made money. And so, That's why I'm kind of bought more AT&T. I don't think I'm going to buy any more. I have 2 positions in my retirement account, and the other 6 positions are in my brokerage accounts. But yeah, that's kind of what my thought process at AT&T is. And then the next 2, TRB, CX, TRULX, are both in my T. Rowe Price account, obviously, as it says here, and they're both index funds. UGI, I just have one position of. It's a utility stock, and I believe I have a covered call on that as well. It's really ran up recently as well. USB, I wish I would have bought more. I think I got that in the low 30s. US Bank, it ran up very quickly, and I have spun out my call all the way out to let's see, it's about 1.5 years out from right now, and I need to spin it out more. I need to leap it more to keep my gains. Viacom's been crazy. I got Viacom around $21, and it went up to 100, and then it came back down to the mid 40s, which where I have my leap at, and my leap actually expires only 6 months from now, which I'm pretty excited about. My leap's at 42.50. Viacom then, of course, they went out and they issued more shares, so that definitely took away the fun out of the running the stock price up. When the company issues millions of more shares, then obviously it's kind of hard to short sell it or whatever they were trying to do. I don't know. I don't really like the meme stocks. It's just too volatile for me. I just can't really figure out what's going to happen, and I don't like to guess. And if I guess wrong, then eventually you get burned. If you hold them, you're going to eventually get burned no matter what. So when it becomes a meme stock, I usually get away from it. But Viacom, I'm definitely going to wait at least. The dividends obviously dropped way down because the price has gone way back up. But I'm going to obviously hold it for at least my year to avoid my short-term capital gains. Vodafone, this is a telecom stock. I own 3 positions. I have canceled covered calls on it. Pays around 5.5% dividend, and I have that in my Robinhood account. Vista Corp is a utility stock. Pays about a 3% dividend. I have 2 positions of that. Cancel covered call on it. Vitris is a spinoff of Pfizer, and I sold it when it happened, but then I rebought it when the price went real low, and then they issued a dividend, and now it's kind of staying steady around that $14-15 price, and it does pay a dividend as well. I'm not sure what my long-term future on Beatrice is, but right now I'm holding it. VIYM, I just have 1 position of. That's a Vanguard ETF, dividend ETF, pays a little under 3%. I have 1 position in my retirement account. Verizon's also in my retirement account. First time I've owned Verizon. I have 2 positions of that, and obviously I'm going to sell covered calls on that in the future. Walgreens, I have a position in each of my brokerage accounts, and obviously it pays around let's say a little over 3% dividend. WP Carey is a REIT. It's in my retirement account. Pays about a 5.5% dividend, and I probably will look to add another position of WPC when I get my rollover back into my retirement account, because I'm going to put it in my brokerage. XLE, it's an energy ETF. Pays about a 4.5% dividend. I have 3 positions of it. You can sell covered calls on it. We're looking to do so in the future when it gets up to its kind of the top of its little scale on its moving average. I will look to buy sell calls on XLE and collect those extra dividends, those extra cash and extra income. XYLD, it's kind of like QYLD, but it's in the S&P 500. This one actually has a history of not going down. It's actually gone up over the years. It does pay less of a dividend, around about 9% dividend. I own 4 positions of it, and it's in my retirement account. And you can see there's a net value. But real quick here, see if I can show you real quick here what this does here on my dividends. Kind of new to my Seeking Alpha account in the last week or 2. The dividends here, I hope it populates. It might not, but eventually there it goes. So this gives you your EX dividend dates. This is really cool. This gives you EX dividend dates, your yield. AG&C's 8.4. I heard Seeking Alpha was not always correct. That's my upside today. Today was a good recovery day from the last few days. But real quick here, you shows your EX dividend dates. Let's see if I can. Where am I? Oh, I want to go here. I'm sorry. These are my payout dates, and we are in towards the end of June here. We're at the 21st. Tomorrow's the 22nd. I got Manual Life paid out this evening. VOIM's going to. I didn't hold VOIM and probably EXLE. Probably in my ex-dividend dates. Those are new in my retirement account. I definitely had a position of QILD. That's paying the 29th. XYLD I had a position of in my brokerage account. So I had one of each of those. So those are paying out the 29th as well. AIG is paying out the 29th. There's your, over here to your right, it says right to the date there is your percentage of your dividend. Aries isn't new for me, so that won't be, I probably didn't hit the ex-dividend date. Vista I did. See, Viacom I did. See, 2.34. Pretty low for me, actually. I mean, it'd be one thing if it was a very good growth stock and I paid 2.34, but Viacom's probably not going to be a growth stock. VHN pays on the 1st. UGI pays on the 1st. HBAN pays on the 1st. You see there kind of what it's the 3%, 2%. HBN's 4.39. Regional Finance. Coke's on the 1st. I got a lot of them on the 1st. PPL's on the 1st. And then, wow, that's a lot of 1, 2, 3, 4, 5. Like almost like 8 of them on the 1st. It's crazy. The 1st is going to be a good day for me to reinvest some of my dividends. Looks like. The 2nd, HIG, HPE, HPQ are always going to be on the same date. MPW on the 8th, 9th. It's pretty cool. Silky and Alcohol, this is free, obviously. AG&C is going to always pay around the same day every month. Alteria Group, that's a nice one. It's going to be on the 9th. GSK, another nice one. It's going to be on the 8th. MPW is a decent one. That's going to be on the 8th as well. Let's see. WP Carrier, I'm not sure I was holding that by the X date. We'll find out shortly. Maine's always about the same time, around the 15th. USB, 15th. And Cisco, BGS, Verizon. And some of these haven't been announced. That's why the BTI is the 24th of August. Real quick, I just want to show you that. That's really cool. You know, and these are all my... down here, obviously, is all my index funds. But that's it for now, guys. I hope that helped you guys at all. If you have any questions, please feel free to ask. Sorry the video is so long, but hopefully there's some information there you could use. All right, take care.